Hi folks, and welcome back to Meaningful Money. Bit of a grey, overcast, but quite warm kind of day, so I'm here to talk to you today about gold. We've been talking in previous videos about asset classes, things you can buy and sell, things you can invest in, so it's the turn of gold today. So before we get into that, let me thank my friends down here in the bottom right, which is Seven Investment Management, who are continuing to sponsor me over 2 years now, and I'm really grateful to them for their support. Go check them out. They're at 7im.co.uk, 7im.co.uk. Go check them out. I'm really grateful to them. So remember, we're updating some of the really early videos here where the video and the audio quality was a bit ropey. This is an update of episode 34. Now, we talked last time about commodities, and gold really is a commodity, but it's a special case. It's kind of an asset class in its own right, or at least that's how we tend to think about it. And rather than just being something fairly dry and boring like a lot of asset classes are, gold has a kind of a special place in human hearts, really. Now, I imagine that's probably because it's as old as civilization itself, and our love affair with it is at least that old. You know, it's jewelry, it's been a kind of a universal currency forever, and you know, really it was only the late 19th century when gold as a currency was replaced by paper money and things like that, just because they were easier to cut into bits and have smaller denominations and things like that. So that was when paper money became prevalent, and gold as a currency sort of ceased to be such a big deal. But it still had an important part. In fact, it wasn't finally severed from currency prices up until sort of about 1971, I think it was, that you know, up to that point, gold was a really important part of how currencies were priced. But for the last 30 odd years, 40 odd years, that's not been the case. Now, gold is measured in troy ounces as a rule. Now, 1 troy ounce is 31.1 grams. Just checking my notes now as I speak at the moment. That's about $1,390, and a troy ounce is a bit about that big. Something like that, if it's about that thick. So not a very big bit. $1,390, about £886 as I speak at the moment. The gold price has come off quite a bit from its highs. Now, the thing about gold, and you remember all asset classes are valued, at least in part, based on supply and demand. The thing about gold, of course, is that we have to get it up out of the earth, and so as far as we know, there's a finite supply of it. So that has an impact on prices as well. We don't know how much there is, but certainly, you know, its ease of being mined has an effect on the price as well. But how do you invest in gold, really? Well, you can do so by actually buying physical gold. You can buy that in bars. We call that gold bullion. Problem with that, of course, is you've got to store it somewhere, and usually you would pay somebody to do that for you. You know, you want a fairly high security vault if you're going to have much in gold bullion. So obviously it's fairly bulky and heavy as well. It's not just bars, you can buy gold coins, the most famous of which probably is the Krugerrand. It's about that big. A Krugerrand is 1.1 troy ounces, so a little under £1,000 worth of 1 Krugerrand. Little story, actually, I had a client who inherited some money from a guy in London. He was a bit of a eccentric, I think, because he had a house in London which had not been updated for 90 odd years, still had an outside toilet, would you believe? But when they were clearing out his house after he died, they found a carrier bag up in the attic with 40 Krugerrands in it. So best part of £50,000 worth. Presumably he was storing them there so that he could have something to trade when the zombie apocalypse happened or something, I don't know. A slightly odd way of investing in gold. Or, you know, you can hold physical gold, or you can use a fund to do it. So you can buy funds which buy shares in gold mining companies. So it's a sort of a proxy for the gold price. If the gold price does well, the shares in those companies usually go up as well. But you can also buy a fund which will hold physical gold. Those are usually called ETFs or ETCs, exchange traded commodities. Got to be careful with those though, because there are ways you can invest in gold without actually holding gold, and what's underneath is all kinds of futures and complex financial instruments. So make sure you know what you're getting. But you can either invest in gold physically or through a fund of some kind. Most people hold gold because it's a good diversifier. It behaves uniquely, really. It certainly behaves different to shares. It's generally seen as a good bet if inflation is a concern, but it's just another asset class. Even though it has this sort of luster that we identify with as humans, it's just an asset class, that's all. So that's gold, okay? Buy some if you want, don't hold too much as a general rule. Remember, supply and demand is always a factor of whatever you're buying, so don't be too swayed by those who say that gold is the only investment which matters. It's actually an incredibly volatile asset class. It does go up and down quite a lot, and remember, it doesn't produce an income, so you're hamstringing yourself by only having the capital value working for or against you. It doesn't produce any income. All right, okay, so next time we are talking about hedge funds, nearly at the end of our little rehash of the asset classes. So thanks for watching this one, and I'll see you next time.